Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so heading into the week, we talked about 38.10, new highs printing, done, and they've been able to bring it back down into this 38.10 area. They've traded as low as 37.91. The low from Monday was 37.88.5. So basically what you've got here, and you can kind of see it on the daily chart, is you just got this big old range trade between 37.90 and 62 on the edges, more like 38.10 to 38.54 inside. So we've been talking nonstop for the last 2 or 3 days about the 54 area. It's been fairly consistent resistance. So they popped it up, they did the new high, and then they started to have problems with it again. 57 quarter, and then, what do you have here? 53.75, 53 quarter, 54, 54 again, 53, and then the push starts back and night. So that 53, 54 area continued to be probed again and again and again, with a couple of, over-the-top exceptions that were pushed back on, but it ended up being a really solid resistance area for us, for everybody. And we had a 50 marker out yesterday afternoon into Globex. We took profits on that, and then I really wanted to take a hard look at the 9-day and weekly pivot, and then we got back into the 11 area. We've got profits on that, and I don't know, maybe we get stopped out, maybe we don't. But before we start praising the bears too much, understand that they need to lose this low, and they need to keep it taken out. Right now, they have a golden opportunity to screw this entire thing up. Create some multi-day double bottom. Look how terrible they are. Look, mom, hold my beer. Here we go. They need to avoid that. They can. They're in a good spot to. The best way to do it? How about we actually close below the 9-day and the weekly pivot and get started on the tests that I've been laying out for months about how you have a meaningful pullback in this tape. Close below 2 levels. Then spend the next Globex, tomorrow, trading below them all day. Not part of the day, not some of the day, not most of the day, the whole day. It's not that hard. As you can see, the bulls do it all the time. If they can pull that off, then they have a chance to convert the daily mid and slowly try to convert the baseline short term from buy dips into sell rallies. I mean, I'll believe it when I see it. Certainly it's coming. Certainly it's been due. But as long as it stays range bound, and as long as moves to the daily mid band are held as they were back on the 15th, and again during the holiday Martin Luther King session, it's not going to do much. So this was your last test of the daily mid, all-time highs, coming back in with a lot of velocity. The velocity is not a good thing for the bears, because they get caught out over the tips of their skis. They start creating higher lows, and then they fall on their face. I fully expect us at some point today to trade up and over the top of weekly pivot and the 9-day. The question is going to be, do they defend it? Do they bring it back in? Where do they close it? So you've got volume weighted average prices at 20. Proprietary level is 16.5. You see the weekly pivot there at 10. You see the 9-day at 15. Hourly mid is way up at 36. That actually behaved really well in the Europe session along with daily pivot to keep things contained. Daily pivot's 43.42. So it's all about where we close. And it's all about, now that we're down here, how do the bears act? It's that simple. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.